Ever wondered what a full-blown market frenzy actually looks like? I don't mean the news headlines. I mean in the actual data. Well, today, we're going to do just that. We're going to dissect one of the most insane single-day stock surges you'll ever see and really get into the anatomy of a mania.
Let's just start with this number, 280.7 million. That's the number of shares of one company, ESS Tech, ticker GWH, that were traded in one day. Now, get this, the day before, just 8 million shares. That's not a jump, that's an explosion of over 3,000%. If a market frenzy has a fingerprint, folks, this is it.
So, that's the big question, right? How on earth does a stock's trading volume explode like that in just 24 hours? What causes that kind of surge? Well, we're going to put on our detective hats today, we're going to follow the clues hidden right there in the charts, and piece together the story of GWH's absolutely wild ride.
All right, Section 1, the main event. It all went down on one single crazy day, October 10th. This was the day that GWH didn't just show up on traders' radars. It was like a meteor streaking across their screens. The price just launched. I mean, it went straight into orbit. Yep, 144%. In one day. Let that sink in. This wasn't some gentle climb up a hill. This was a vertical takeoff. A move so sudden, so aggressive, that it had everybody in the market stopping and asking the same exact question. What in the world is going on here?
Okay, so to really understand just how shocking this was, we've got to look at what happened before the explosion. You know, the quiet before the surge. And trust me, it was quiet. For months, GWH wasn't a storm, it wasn't even a ripple on the water.
So check this out. For months, from mid-July all the way to early September, the stock was just flat, kind of drifting between $1.25 and $2.65. It even dipped down to a low of $1.22. Then it found a little footing around $1.60, $1.70, and then bam, October 10th. It just detonates. It goes from $1.72 to a peak of over $5. It's that crazy contrast, you know? The long, boring flat line followed by a vertical rocket launch. That's what makes this whole thing so nuts.
All right, Section 3. So how do we even begin to make sense of a move like that? Well, this is where we get to decode the technical clues. Think of these indicators as the market's forensic toolkit. They let us look under the hood and see what's really driving the price. Things like momentum, trend, and volatility.
So our first tool out of the box is the RSI, the Relative Strength Index. And the best way to think about it is like the RPM gauge, the tachometer, in your car. It's not the speedometer, right? It doesn't tell you how fast you're going. It tells you how hard the engine is working. And for a stock, the RSI does the same thing. It measures the intensity, the momentum of its price moves.
And let me tell you, GWH's engine wasn't just working hard. It was absolutely redlining. The RSI hit 84.35. Now, just so you know, anything over 70 is considered overbought. So 84? That's a screaming signal of just incredible buying pressure. But it's also a massive flashing red light on the dashboard saying, warning, engine is running dangerously hot. Okay, next clue, moving averages. These help us see the trend underneath all the daily noise, and I love this analogy for them. It's like the tortoise and the hare. You've got the simple moving average, the SMA, that's your tortoise. Slow, steady, gives you the big picture. Then you've got the exponential moving average, the EMA. That's the hare. It's way faster, reacting much more quickly to what's happening right now. And in GWH's case, the hare was sprinting so far ahead of the tortoise, it wasn't even funny. That told us this burst of speed was absolutely the real deal.
And just look at the result of that sprint. See that price disconnect? You've got the current price way up here, and its own recent averages are way, way down there. It's like a rubber band being stretched and stretched and stretched to its absolute breaking point. This huge gap is a textbook sign of a parabolic move, and it makes you ask one thing. Is this thing about to snap back and hard?
Okay, our last piece of evidence comes from something called Bollinger Bands. The easiest way to picture these is to imagine the stock's price is a river. The Bollinger Bands, they're the river banks. They show you the normal expected flow. When things are calm, the banks are close together. When things get choppy and volatile, the banks get wider.
So what happened with GWH? Well, this wasn't just the river flooding its banks. This was a full-on tsunami. The price shot so far above the upper band, it was completely off the map, in totally uncharted territory. When you see that, it's one of the loudest signals the charts can give you that something extreme, unusual, and probably unsustainable is happening.
All right, so let's sum up the evidence. We've got red-hot, redlining momentum. We have a price that's completely disconnected from its own trend, and we've got volatility that's literally off the charts. All of this brings us to the core question, the real conflict of this entire story. Is this a real breakout, a new beginning for the stock, or is it just a massive, dangerous bubble that's about to pop?
And this is what's so fascinating. The data is telling two completely different stories at the exact same time. It's a total paradox. On one side, you have the bulls. They look at that 280 million share volume and they say, see, that's massive accumulation. A powerful new trend is starting. But then you have the bears. They're looking at that screaming hot RSI and the huge gap from the averages, and they're saying, no way, that's a classic bubble. It's totally unsustainable. They're all looking at the same chart, but they're seeing two totally different futures.
And this quote right here, it just nails the problem. The stock's liquidity event, that just means the huge trading volume shows a ton of people are interested, for sure. But the sustainability, whether it can last, is a huge question mark. Why? Because there was no fundamental news, no big new contract, no blowout earnings report. It was just a technical event, a spectacle on the charts, without a solid, real-world reason behind it.
So you've got these two warring stories. What happens next? Where does it go from here? Well, based on everything we've seen, we can actually map out the key price levels, the battlegrounds where the bulls and bears are about to go to war. So here they are, the key price levels you've got to watch. Up top, you've got $5.33. That was the high, so that's the new ceiling. The bulls have to break through that. Then on the other side, the first potential safety net or support is around $3.50. And if that breaks, the ultimate floor is that 5-day moving average way down at $2.57. Seriously, the entire next chapter for this stock will be decided in the fight between these levels.
When you boil it all down, there are really three ways this could play out. Scenario 1, the bullish path, the momentum keeps going, they punch through that 533 high and head for $6. Scenario 2, the bearish path, everybody gets exhausted, people start taking profits, and the stock tumbles back down into that $3 range. And then there's scenario 3, the sideways path. The stock just catches its breath, consolidates, and trades in a range for a while as the market tries to figure out which story it believes. And that leaves us with this final fascinating question. When the data shows you both extreme strength and extreme risk at the same time, how does a market decide which story to believe? The charts for GWH were screaming buy and sell with the exact same level of urgency. It's just a powerful reminder that the market isn't just numbers and data points. It's a battle of stories, of narratives. And in the end, the price is just the outcome of whichever story more people decided to believe.